Rakshit, afternoon. Thank you so much for your time. I was looking at your portfolio, and in your Rising Giants portfolio, quite interestingly, you have added a ball bearings company. Now, I want to understand on this category first. There are very few large bearings company in India, and in this entire manufacturing renaissance which the country is looking towards, triggered by government and nudged by them, but Indian companies are doing some fabulous work. How do you see the role of a technologically pretty advanced bearings sector in the company?
Hi, good morning. Thank you for having me on your channel. So yes, we've added one ball bearings company, and there's engineering skill required in this kind of a business, which is difficult to replicate easily. It's value added part of product offering in the engineering and manufacturing space, and hence wherever I think if an investor can find stickiness of the competitive advantages here. The rest of the part is trying to figure out if let's say private capex in India as it picks up, will the demand factors also rise? So supply factors, once you've convinced about them, which we are, I think over the next couple of years, as the private capex also picks up in the country, there are opportunities for stocks like these.
Rakshit, I also see that you have increased your exposure towards a pipe company, and this is the plastic pipes or the water pipes mainly. But this entire space of pipes, this is getting a very big boost, not only because of the construction industry, the real estate space, but also because of Jal Se Nal initiative of the government. How do you see the prospects of pipe company? This is of course a leader in the space, but also so many new companies are entering this. The competitive landscape, because of the big profit pools, are also getting tighter. So how do you see this space?
No, you nailed the points there very well. One is the competitive aspect, and the other is the macro demand aspect. So on the macro demand side, pipes is not so much of a recurring renovation home building material article. It is more for new home building or a very large renovation project where you actually do fix the plumbing as well of the house, if it is a pipe related to the house. So when it comes to the macros, the way the real estate demand has picked up in the last 12 months, it's certainly supportive for home building material in general and for products like these. But there's a very specific competitive aspect here. There's one other large competitor, one of the largest players in this industry, where we understand after that player was sold to an MNC 5 years ago, we understand that over the last year or so there have been some weakening of the sort of grip that the firm had at the channel. And hence there are opportunities for market share gains. So there are two companies, one of which we have owned in our portfolios, two companies which are leading the market share gain from this other large competitor who's losing the market share. So there's a lot of opportunity that we are trying to grab here in terms of the competitive space. Yes, there will be new players entering all the time because the returns on capital employed are high here, and in any industry that would attract competition. But the competitive advantages here for any new player will be incredibly difficult to build overnight. Because on the one hand, you need the product quality to be good, and product quality is not just the pipe quality; it's also the fittings quality. On the other hand, you need the influencer connect. Where the plumbers, the contractors across the country should be aware of and convinced about why they should keep and sell your products, and then the channel connect, right? So it's at multiple layers that a new competitor, new entrant will have to work on. But what we are trying to benefit from is one of the existing players, possibly losing some market share, and we trying to gain from it.
Another very interesting stock in your portfolio. It was originally a cement sheets company, roofing solutions at best, but now we understand that the things are kind of expanding, and they have cladding solutions now, ceiling solutions, pre-engineered fab, which side of the business of this company do you see gaining traction going forward, or is there a transformation happening there? I see you have added it recently in your Little Champs portfolio.
Yes, this is a company-specific turnaround where the same company was was under stressed financials a few years ago. It has had a change in the few layers of the management team over the last few years, and this is the solution that you rightly mentioned is more for commercial real estate. So there will be offices, there will be hotels where these kinds of solutions go in. This is not so much for residential real estates, but it reduces the construction time, the renovation time. So the utility of using these boards is very high for both the owner of the real estate as well as the contractor in turning around the project at a fast pace. So the demand for this category is rising, replacing the sort of standard walls that you had in all of these commercial spaces. And this company is amongst the biggest beneficiaries of that demand. But it's more a company-specific turnaround that we have seen happen in the last few years that we are trying to benefit from.
I understand clearly. What about some of the chemical names? You have studied chemical space as a team for a very long time. It has gone through last very difficult times because of Chinese dumping and market share loss and all of that, delays in export. Do you think, are we nearing a bottom as far as, and maybe the stocks with higher margin profile, more complex product profile, those are the ones which will start moving when the Chinese dumping ends. What are your thoughts there?
Yeah, until 12 months ago, this space was doing well, chemicals. Over the last 12 months, there have been several challenges more related to supply chains globally, where there was inventory destocking and price movement, so on and so forth. What we see is that from a long-term perspective, the China plus one story that we have seen play out in several sectors, at least there are initial signs. We see that certainly playing out in the chemical space here. We also see the inventory challenges sort of coming towards the end of their cycle, and maybe over the next few quarters, you should be able to see more normal like-for-like growth rates, which are representative of what these companies are capable of delivering in the long term as well. And then you got to go stock specific here. It is not that when manufacturing moves more and more to chemicals industry in India, all of the companies will benefit. So a little selective as well. But yeah, I think you're right. Bulk of the pain is out of the way that we experienced in the last 12 months, particularly is how we see it.
Right. All right, Rakshit, we'll let you go on that one. Thanks so much for joining us on this show today.